are talking Landlord Insurance now with Endsleigh, and I'm joined by Luke from Endsleigh. And Luke, what are the main types of landlord insurance that landlords should consider taking out?
Okay, so landlord's insurance is all about three areas. It's about assets, it's about income, and it's about liability. So your assets is the property that you're looking to insure, so it's the building, it's the house or the flat or whatever. Income is what happens when you're not able to rent that property out, either because your tenant decides that they don't want to pay rent or you have some kind of dispute, or because the property is not in a state to be let out because there's been a fire or a flood or some other kind of catastrophic loss. And the other one is liability. So what happens if you cause an injury or damage to your tenant or your tenant's property or property around it? That can be very costly. What happens to cover that exposure? So landlord's insurance is about, effectively, it's that simple. It's about those three specific areas. Now, what's involved in each of those areas is where it gets a little bit more complicated. So in terms of the asset protection, the landlord needs to decide what is it that it's really important to them. Is it just catastrophic loss? Is it just, if there's a fire, it burns down, are they covered for that? Or do they want to make sure that if the tenant leaves the property in a poor state of repair and with dilapidations, do they want to be picking that up as well? And that's the kind of thing that the landlord needs to get into the grit of the policy, or speak to their broker to understand exactly what it is. Because the important thing for the landlord is, and also for the advisor and for the broker, is to make sure that when something happens, there's no doubt in the landlord's mind or in the broker's mind that what's covered and what isn't covered. It's not good for either party to be in a position where they're surprised at the end when there's a claim. That needs to be talked about before that happens. So that's the key part. I think because, and this is the case for all insurance policies, is that because it's something that people don't particularly like to spend money on, I think there's an assumption that you pay your money and then you get the product. And I'm exactly the same with my home insurance. I don't sit down there and read the fine detail of the policy. But actually with landlord's insurance in particular, because that's an income driver for the landlord in most cases, it is actually really important that you spend a bit of time, so either discussing it with your broker or reading the policy for yourself to make sure you're really clear in your mind about what it is actually covering, and that's just general advice. But those are the three main areas.
Yes, I was going to say actually landlords tend to be very price sensitive, and they will choose something that's £5 less, even if it has much less cover.
Yep.
So I think what you said there was very important, that perhaps insurance isn't something to skimp on, to talk to your broker, to look at the fine print and make sure that you are covered, because it's always better to have it and not need it than need it and not have it.
That's absolutely right, and I think from a consumer's point of view, insurance is something that you rarely use, and therefore you absolutely see it as a cost which goes into a very intangible area. As a broker, we see claims all the time, so we see it from a very different point of view, and we see conversations with customers all the time where their expectations aren't really matched to what they've paid for. And you're absolutely right; it's an incredibly competitive market, and that's absolutely right. It absolutely should be, but it's not really a cost decision. But from the landlord's point of view, don't assume that you're not going to need to use that insurance policy. Don't assume that you're going to always have a fantastic relationship with your tenant. You might do. You probably will. As far as an insurance point of view is concerned, we make an assumption that you're probably not going to need to use the insurance policy, and that's why it's priced the way it's priced. But the reality is that somewhere out there will be someone making a claim because they've had a problem with their building. There'll be someone out there making claims they've had a problem with their tenant, and it's always more cost effective to make sure that's being planned for in advance. And if you take the area of tenant insurance or rent guarantee insurance, to make sure that legal disputes with tenants are covered, it's always cheaper and more cost effective to pay for that cover in advance of the event happening than have to try and make provision for it when it does happen. And it's not just the cost involved. I guess if we're looking at the subject of rent guarantee insurance, so this is tenants where either they don't want to move out of the property when you want to move back in, or they don't want to pay rent. It's not just the cost involved or the lost income while that's happening. But if you're a landlord and you've got a full-time job, then the hassle involved in going through that process, and also the emotional, I suppose, trauma involved when that happens, and planning for that in advance. I guess no one wants to think at the start of a tenancy agreement that things might go wrong. And I say that's in any contract in life that you sign, when you're signing a contract, you don't necessarily think of what's going to happen at the end. but it's good practice to make sure that you're thinking about that and planning in advance. And one of those key areas is making sure that you've got the appropriate insurance policies in place to cover your liability as a landlord, and also make sure that you can cover any potential legal costs or any income loss if a problem arises. Hopefully it won't.
I think you've made two very important points there. You can't put a price on peace of mind, and in property we know that prevention is always better than cure. Now, just talking a bit in your area of speciality, which is portfolio insurance, at what point should a landlord consider going for an umbrella portfolio policy rather than individual policies on individual properties?
I think when a landlord gets to the point where they've got more than a handful of properties, and by a handful I'm thinking maybe more than 4 or 5 properties, that's from our point of view, certainly from our company's point of view, then it's almost always a better option to start considering bringing those properties together under one insurance policy. Partly because it's often cheaper, organising it and arranging it in that way, but also it's just less administratively, it's much less hassle for a landlord, unless you're a landlord that particularly likes arranging your insurance multiple times during the year. Now, I don't enjoy arranging my insurance multiple times during the year. It's not that much of an enjoyable experience, and that's generally the feedback I get from landlords as well. So doing that once a year, where you can sit down and you can review all of your cover, and also if I go back to what I was saying earlier about making sure the cover is correct, then if you've got 4 or 5 properties or more, then sitting down and reviewing it together, bunching your properties together, knowing that on the 1st of June or the 1st of April, whatever it is, that's the point where you're going to sit down and you're going to review what cover you've got in place. Is almost always a better option. As I say, it tends to have economic benefits as well.
Yeah, definitely. Just to finish then, Luke, landlords sometimes have quite niche things that they need dealing with, such as a property of non-standard construction, an empty property. Now, you have a department that will consider unusual cases on a case-by-case basis, won't you?
Absolutely. We have a team that specialises in, as you say, non-standard. We call it non-standard property. I mean, it could be a whole range of things. It can be property which is let on a short-term basis, or maybe let to a local authority where the landlord doesn't have really much of a direct control about what tenants go into that property, which some insurers are particularly keen on. So it's more of a specialist area. It could be properties that have been affected by flooding or by movement or subsidence, those types of areas. It could be non-standard construction, so properties which are timber framed or self-builds. It could be properties that are undergoing significant renovations or repairs. Properties which are vacant for longer periods of time for a whole range of reasons. All of those types of risks are fairly niche, and there are insurers out there that absolutely specialise in those types of properties. And as a broker, our job is to make sure that we can put you in touch with those insurers. And that's absolutely something that we specialise in, aside from our more standard portfolios. And I think it's probably fair to say, though, that if we go back to the portfolio side, the bigger the portfolio that you have, the more likely it is that you're going to have a range of properties in there, and a range of ones which perhaps won't be entirely standard. And again, that goes back to the benefit in insuring them together, is that sometimes if you've got a portfolio of properties and one of those properties might be one that's let out as an HMO to a local authority, then that insurer, who might not ordinarily consider that property on its own, if they're insuring a range of properties, they might be more comfortable with accommodating that one property. So again, it's well worth bringing your assets together and looking at it on a collective basis.
Well, fantastic advice there. Thank you so much for joining me, and also, as always, thank you to Endsleigh for your support of Property Tribes and helping maintain it as a free-to-use community resource. We really do appreciate your support.
No problem. Thank you.